trends, which is obviously important, but I think that trends can also get you into trades too late. And so we are going to look at the concept of a trend and how we might use this information to make better trading decisions on the smaller time frames. Okay, and so if you look at my charts here, I have a 4-period analysis where we have the 1 hour here at the bottom, we have the 4 hour, we have the daily here, and I have the weekly chart here. And so I'm going to be putting trades on these 2 time frames here, but I'm gonna, and sometimes the daily but also the weekly, but I want to be mindful of what's going on the bigger time frames. So if we look at the weekly chart here for a second and reiterate supply and demand trading, what are we doing? Well, we're buying low and we're selling high. So you want to operate at the extreme, at areas of value. And if you look at this for a second, if we zoom in a little bit, notice that prices formed this area of value where we had high prices here, we had low prices here. Okay, and this is clear to us because price went up here, we went down, we went up, and you can see that we're kind of trading inside this channel here. And if we just put a box around it to keep things simple, we've got something that looks a little bit like that. Okay, something like that. And notice that we're moving up towards the edge, the upper edge of this price area. So we have resistance and we have support. Okay, and so if we are moving to the upper edge of this market, so there's nothing going on in the middle here. This is just price in agreement. There's no supply or demand here. We want to operate at the extremes. So we want to be selling up here and we want to be buying down here or lower. Okay, and so we're looking at this, there's nothing to do in here. And so getting involved in the market in here is just going to ensure that we have higher risk and lower reward potential. Okay, so you want to avoid that and you want to focus up here and down here, and note here that we are moving high, we are getting high. So what does that mean? Well, that means that ideally on the shorter time frames we want to be looking to sell at the extremes. Okay, so if we go down to the daily chart here, we had kind of like the high prices here, we have the low prices here, but also here because price came down to it, rejected. But notice here that we moved down, now we move sideways here, and so this is a high price for this. This is lower price, this is a very low price down here. Okay, so what do? Well, you know that you want to be selling once price starts to move above these. And if you've watched any of the other material that we've had on, looking at this particular piece here, if we look from the low to the high, and we connect those and we draw another one here, we go from the high to the low. Here we have the sell side and here we have the buy side. Okay, so you want to be buying in demand on this side of the chart, and you want to be selling on supply on this side of the chart, which brings our attention to this. We have this one here, and we have this one here, and these actually kind of linked together, so I think that we could box them off and do something like that. Okay, and for buying, well, you want to be looking to buy below somewhere down here. You can see that price has been down to these price levels historically, tested, we've left, and we have a kind of a low, we have a nice swing, a high to a low, and then price is moving higher. So we're buying on this side, we're selling on this side. We want to be selling at the extremes, and notice that price tested this area here a couple of times, so this is the beginning of the sell zone, which brings our attention to this area of supply that we have up here. Okay, so we know that we want to be selling because on the weekly chart we're reaching kind of the highs here, the highs of these price sensitive areas where we saw price return historically. On the daily we can see an area of supply at that area. So if we go to the 4-hour chart and have a look, let's have a look here for more clarity. So if we scroll back, we'll mark off the high here because this is the beginning of the sell zone, and we scroll and we look for that, and you can see very clearly where that is. You can see we have it right here. So on the daily chart it looks like this, and this price level is the 10066. If you have a look here, we've got another one just here, something like that, and this is pretty close, I'd say 1006. This is slightly closer. Okay, and I like this one here because price kind of traded down to this area from above. It didn't really care about this price historically. We moved up, we moved sideways, and then we saw that big push away. Price has already been to this price level, and so this is a very obvious place for us to start to sell. Okay, so if we get into this trade, are we going to be holding it for weeks or months? Probably not. Potentially hours, potentially days, but not weeks or months. Okay, and this is because, I mean, price has already been down to this area of demand here. It's tested, our price has rallied, and we moved sideways for a while. Now we're moving higher. So we can expect a reaction, but we can't expect necessarily this trade to continue moving forever, because it's not, I mean, no trades move forever. Price is moving from areas of demand, so where we have people willing to pay low prices, to areas of supply, which are areas where people are looking to sell. Okay, so you have to pay attention to this, and we can see what we have to do on the weekly chart. So we're looking at areas of resistance, and then we're looking for areas of supply beyond this area of resistance, which is telling us that if price managed to move away from this area historically, a higher price is going to attract even more selling. Okay, so we want to try and position ourselves outside or above and beyond this area of resistance at supply, which we have just here. Okay, so this is a super important lesson, I think, in relation to using the trends. So if you're looking at, let's say, the daily chart, and you're waiting for price to form some kind of a trend, I mean, historically, if you've watched some of the other lessons, we have price moving higher and lower and higher and lower and higher. Okay, so if you want to use a trend line, you can see that, yeah, we have a trend line like that, so we should be buying, but you can't just buy here. Why? Because we're too close to these highs. Okay, and so when the trend has already shown clear signs of itself, then the move, it's kind of too late to get involved, if you know what I mean. We have a trend that's moving up. I mean, trend in that we have higher highs and higher lows, and that's fine, but that doesn't mean that we should buy. It means that, I mean, the major flows are moving higher because we have demand being respected, but that doesn't mean the price is not going to slow down, especially in the face of opposing supply here. I mean, I'm going to be looking to sell at this area here in an uptrend, and that's okay. So if you're only looking at trends or moving averages, then you're getting into trades probably a little bit too late. You want to find areas where, I mean, prices had to travel far. So price moves up, and you have supply here, and we have resistance, support, resistance, support. Price pokes up into this extreme area, and this is where we're going to begin to see people get on to sell. So if you were to focus on something like liquidity, okay, where you have, this is price here, and this is volume here, and so where we have current price, depending on where we are, let's say there's a spot price currently, so this is close to price, and we have the volume is going to be high when it's far away from price, and it's going to be low where it's close to price, and it's going to go up again. Okay, so this is a high price. Actually, what I can do is I can go like this. I can go PL, price low, and this is price high. Okay, so operating in the middle here is not going to be a good idea, because that means that you'll be buying and selling right here, which is close to price. You want to be selling at high prices, which is, here we have a high price, this area of supply, and you want to be buying at low prices, which is going to be below where price is, let's say somewhere around here or here. Okay, and so operating in the middle, this is not good, because profit targets are close to where price is, and this isn't good because if we're looking to buy here, you look how close we have resistance, and that's really close. So let's say you're risking 50 pips to take on this trade, meaning we don't even have 50 pips to the target, so that's a really bad trade to consider. Okay, and the same for short trades. If we're looking to sell, we want the opposing demand to be far enough away from price that we can expect it to continue to wriggle down. And so price moves easily here, okay, and it moves slowly and more aggressively away from areas here, the extremes. Okay, and so I think when you look at this, you can see that price is just trading in a range here. Be a good place to sell from here and above, and a good place to buy from here and below. Okay, we can't see any demand here. We had some demand here, so this might be interesting. okay, somewhere in here, and this is close to the PL, like the price low, and here we have the PH, which is the price high. Okay, so operating in the middle here is a bad idea. Operating here and here is good, because this is going to enable you to, for example, risk 1 unit of currency for a potential to gain more than one. Okay, and so this is just an important thing to remember here. Okay, you can see that currently price is operating here. This is in the middle. Of course, we're kind of stuck in the middle, but above price we have this area of supply just here, right there. And also notice here that, I mean, price managed to gap away from there. So we think that focusing on like the law of probabilities, we have a high probability area of supply. Why? Because it's a high price. So we have if we draw here again, we have PL and we have PH. This is orders, and this is current price, and we have volume like this. And this area here is close to this. This stuff in here, or even down in here, is kind of closer to where price currently is. Down here, or beyond this point here, for example, around here, this is operating at these lower prices. Okay, so you want to position yourselves in the extremes, and you want to stay away from the middle. So we look at that, you go down to the smaller time frames, see what that looks like. You see this was just a nice cutaway, how price, and we tested the area, tested, and then price just cut away and we gapped down, and price has not been there since that. If we go to the daily chart and have a look, you can see the beginning of the sell zone, I mean, starts here. Okay, go to the 4-hour chart and we move over. You notice that, I mean, this is price poking into here, so the slingshot was pulled back to here. We have some fresh supply just up here, which is, it's a lot clearer and nicer on this chart. If we have a look at the weekly, what does it look like? Yeah, I mean, if you look at the weekly, you can see that this kind of closed outside the range of this one, so you could actually do something like this, like that. Okay, just a nice area of supply there, and my entry is a little bit lower, which is at the edge of that daily supply, because this is where I feel that price is going to have a bit of a bounce. We're still pretty far away from price, but you know that we're operating at the extremes because we're into the sell zone. Okay, so this is an expensive price, a high price, and so I'm confident selling at these high prices. Okay, good. Well, I'm gonna leave it at that. If you have any questions about this video, please send them to me, or leave a comment in the video, and have a lovely weekend. Thank